Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts that can help you succeed. Today, we're talking about tax-efficient investment strategies, a crucial topic for anyone looking to maximize their returns and minimize their tax bill. Imagine you're on a road trip and your goal is to reach your destination as quickly and efficiently as possible. You've got your map, your vehicle, and your fuel. But what if I told you that there's a way to optimize your route, reduce your fuel consumption, and avoid traffic jams along the way? That's exactly what tax-efficient investment strategies can do for your investment portfolio. So let's start with the basics. What are tax-efficient investment strategies? In simple terms, it's an approach to investing that takes into account the tax implications of your investments. It's about making informed decisions that can help you reduce your tax liability, maximize your returns, and achieve your long-term financial goals. To understand how this works, let's look at some core principles and theories. One key concept is tax loss harvesting. This involves selling securities that have declined in value to realize losses, which can then be used to offset gains from other investments. Another important principle is the idea of tax-deferred growth. By investing in tax-deferred accounts such as 401 or IRA, you can delay paying taxes on your investment earnings until withdrawal. One notable example is Burton Malkiel, a Princeton economist who has written extensively on the topic of tax-efficient investing. According to Malkiel, taxes are a major drag on investment returns, and investors should strive to minimize their tax liability through smart investment decisions. So how do these concepts play out in real life? Let's look at some notable examples. One success story is that of Warren Buffett, who has long been a proponent of tax-efficient investing. By holding onto his investments for the long term and minimizing his turnover, Buffett has been able to reduce his tax liability and maximize his returns. Another example is the company, Vanguard, which has made tax efficiency a core part of its investment approach. By using index funds and ETFs, Vanguard has been able to minimize trading costs and reduce tax liabilities for its investors. If you're just starting out as an investor, one key takeaway is to start early and be consistent. By investing regularly and taking a long-term view, you can reduce your tax liability and maximize your returns. Another tip is to consider tax-deferred accounts such as 401 or IRA, which can help you delay paying taxes on your investment earnings. Additionally, it's essential to understand the different types of investments and their tax implications. For example, municipal bonds are generally tax-free, while corporate bonds are subject to federal income tax. By understanding these differences, you can make informed decisions that minimize your tax liability. Research has also shown that tax efficiency can have a significant impact on investment returns over time. A study by Morningstar found that the average tax cost of investing in mutual funds can range from 1% to 2% per year, depending on the type of fund and the investor's tax situation. By using tax-efficient investment strategies, investors can potentially save hundreds or even thousands of dollars in taxes over the course of their investment journey. In conclusion, tax-efficient investment strategies is a crucial concept for anyone looking to maximize their returns and minimize their tax bill. By understanding the core principles and theories, and by applying practical tips and strategies, you can achieve your long-term financial goals and build wealth over time. As we wrap up today's episode, remember that every decision you make as an investor has implications not just for your returns, but also for your tax obligations. By being informed and taking a proactive approach to tax-efficient investing, you can potentially increase your after-tax returns and bring yourself closer to financial freedom. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.